on to our first session of the afternoon. Now, 8 weeks on from his first presentation at the first TTG virtual seminar back in early April, Martin Alcock is with us again, examining how the travel landscape now looks, whether there is light at the end of the tunnel, and how the crisis could redefine the travel industry as we know it.
Hey guys, Martin from TTC here. So we've been in some sort of lockdown now for about 10 weeks. Personally speaking, I don't think I've ever gone as long as this without a holiday. Equally disappointing though is that normally I would have been on around 4 or 5 overseas travel conferences by now, which of course aren't holidays, but are vitally important work events. So in the absence of the real thing, I'm delighted to be joining TTG's webinar again to get my virtual fix. Today's sessions are all about salvaging the summer season. And for obvious reasons, that is still the focus for most of the UK travel businesses that we're working with at the moment. But of course, the issues caused by coronavirus go far deeper than current summer and are likely to have much longer lasting consequences. So in this presentation, I want to take you through what we're seeing at the moment right now in the conversations we're having with clients, what we expect might unfold over the rest of this current summer, and then what are the implications for our sector beyond summer and over the next 12 months. As you can no doubt see, I've used my time in lockdown wisely and I've been brushing up on my tech skills. I really hope you find this presentation useful. I'd be really interested to hear your views at the end, and I'll be around to take any questions. So look, there's no doubting that things are still really tough out there. The atmosphere is really strange though. I mean, the issues that we are facing are the same ones that we've been dealing with since March. In many ways, it reminds me of the scene from Austin Powers with the steamroller crash. You know, we're all sitting here watching this thing coming at us, but there's very little you can do, and to see these businesses in some cases just frozen and not able to take much in the way of action to prevent some of the damage. There's certainly no cavalry coming over the hill. It's really not good to see. But, you know, despite that, there are certainly some early signs of life, I would say. There are some indications that bookings are starting to upturn, but definitely there are plenty of barriers to work through. I think the FCO advice is obviously the most prominent of those barriers, but you know, equally, depending on sort of what part of travel you're in, the quarantine rules and this rumour and counter rumour just are deeply unhelpful, really. And I think then you add to it the lack of sustainable, suitable travel insurance. That's a major inhibitor. Then companies, I guess, have got to deal with some of the more practical barriers that could restrict them from taking those bookings, and we're certainly going to explore some of those in further detail later. Many of these are, of course, interdependent. So, for example, if the FCO were to relax their rules, that would presumably have an immediate knock-on effect on the availability of insurance. I'm afraid to say I don't have any insight on the FCO process and when they are likely to relax their position. I think it is worth, though, looking back at the original statement, their advisory notice, and there's two sort of key things you can pull out here. The first is this concern that countries may restrict travel without notice. You know, certainly we are starting to see positive signs from various countries. There was news yesterday, for example, that Portugal are very open to the idea of air bridges and would certainly consider having something like that in place as soon as the end of June. I think another one of the key concerns was around airlines and their potential for them to suspend flights. Well, again, you're starting to see airlines coming out with plans for them to open up again and start to get their huge operations back up and running. EasyJet, for example, just started this week that they would plan to run substantial parts of their route network by July, although obviously with significantly less capacity or less frequency on those route networks as you might expect. So I think there's indications that the FCO conditions are starting to be resolved. I think we also do have a bit more of an indication on what the actual flying experience might look like. ICAO, the International Civil Aviation Organization, came out a week or so ago with their takeoff framework. Now, these aren't legal obligations. They're really an advisory framework that airlines and airports are working with. But a few points worth drawing out, I think. Firstly, the wearing of masks and face coverings will be obligatory inside aircraft terminals, certainly on airlines, and you're seeing some of the airlines coming out and confirming they will require that. Requirements or recommendations that all passengers and staff on arrival at an airport would be subject to some sort of temperature checks, maybe even would need to present health certificates. ICAO stopped short of advocating leaving the middle seat free. That's something we've heard a lot about. I think the reason they stopped short is probably more to do with the profitability and the unit economics of aircraft than anything else. But certainly they are advocating that where possible, passengers should remain as far as possible away from other people. So if there are spare seats, then the passengers should be spread around. The guidance advocates for no food on board or certainly limited amounts of food. Anything that is served on longer haul flights should all be pre-packaged. Also things like the peripheries, newspapers and magazines wouldn't be allowed and would be removed completely. A bit of guidance around use of toilets, where possible, staff to have separate toilets to the customers to be allocated a specific toilet on the plane to minimise contamination. Flight attendants obviously or rather passengers to travel as light as possible, so possibly some restrictions on the numbers of hand luggage you would see there, a kind of reversal of what we've seen in recent years, where the trend has been to far more luggage on board and sort of less going in the hold. So I think some indications of what that experience will be like, and I guess as things start to open up, we'll see different airlines might take a slightly different approach. I think one thing we're not quite sure about is that social distancing point and exactly how that will work in airports. I think we're all aware of this 2 meter requirement, but as a for instance, a typical short haul aircraft, take the Airbus A320, which is EasyJet's sort of mainstay, carries around 180 passengers. So if you assume there are kind of 90 separate groups, roughly 2 passengers per group, then that would need a queue of 90 meters to get them through check-in and get them through and onto the aircraft. And again, at busy times, hard to imagine there would be enough space for that to go on. But certainly when you got into much longer haul aircraft like the A380, for example, you need something more like 500 meters for all of those passengers to queue safely. So a lot of issues there for airports to grapple with. And I guess we'll start to see how that looks. But I think you look at the hotel experience, and again, no doubt that will look very differently. I think all of the major hotel brands seem to be in the process of refining their strategies and publishing various bits of information on safety and how they'll approach it. But what seems to be fairly consistent, flicking through them, is, gone will be the minibars in the rooms, the frivolities like, the bathrobes, the 600 scatter cushions that you find on your bed. Never really understood why anyone needs so many cushions, to be honest. But gone too will be things like the breakfast buffet. The hotels are seeking to discourage people from congregating, so things like the comfortable lobby will probably be gone, or certainly will look very different. I guess it's not all bad news. The hotel check-in queue might be a thing of the past. Certainly hotels seem to be pushing quite quickly to get technology in place to run automated check-ins, and even things like using mobile phones to unlock doors to minimize contact. Always struck me as a bit of a peculiarity, really, in this day and age, that we do still need to queue at the desk to check in. The whole experience will feel very different, though. I mean, luxury hotels are installing plexiglass screens over their front desks. So instead of the typical luxury greeting, which might look something like this, it could feel a little bit more like, going into a branch of Coral bootmakers. Of course, the professionalism and welcoming demeanour of the staff will no doubt still shine through. So no doubting that the experience will feel very alien. How much of these changes last beyond this current summer season, I guess we'll see. But, a few obvious observations. One is that there's a high requirement for things like single-use plastics. Everything from cutlery to sachets of salt to condiments will all need to be single-use, and it's really a reversal of everything we've seen the hotels tried to do over the last few years from a sustainability standpoint. I guess the other big obvious point is that a lot of these measures will come at an extra cost, whether it's extra cleaning, the additional PPE that's going to be needed for the staff, even things like not having a breakfast buffet and having to serve people from a menu would add a huge amount of cost to the cost structure of a hotel. Again, the larger groups maybe can wear that, but some of the smaller hotels will really find that difficult. And that's going to put much more pressure on their cash flow, which is already in a very difficult position. I think turn attention to the return of bookings. I mean, anecdotally, we're still seeing signs of booking improvements. Fair to say domestic is still leading the way. If you look at just what we sort of expect the next few months to play out, and based on the conversations with our clients, what they think that the next few months might look like, starting at kind of May, I think both domestic and international were sort of around about 90% down. That was pretty consistent. I think we've sort of felt that international bookings maybe would start to improve, looking something like that. So still by January, February next year, not getting back to the realms of where we would have been in early 2019, early 2020 rather. But some sort of gradual improvement as some of those barriers that we talked about at the start to become a bit more open and a bit clearer. Domestic does seem to be improving much more quickly. I mean, in fact, in the holiday rentals sector, you would really start to struggle to find capacity in late July and August. We're starting to hear those bookings really improving. Speaking to one operator in that space was saying that even in June, their bookings were only about 30% down on where they would expect to have been last June, and that's from a May position of something like 90% down. So definitely they are starting to see that pent-up demand coming through. I think tour operators who sell international holidays have tried to get customers to commit to moving their bookings to, say, 2021 and are trying to work with their passengers now to make slightly longer term bookings to get through this initial phase of uncertainty. And those delays, I think, certainly are having have a lot of an impact on travel agents. I mean, if you consider that typical timeline for when a customer makes a booking, they pay their final deposit, and then ultimately they depart on that holiday, the final balance usually is collected around the 10 to 12 weeks before departure. And so whilst the tour operator is getting some cash flow in at the point that the booking has made, the travel agent is only earning their commission at that point that the final balance is received. And so whilst cash flow might be sort of eased by lots of bookings coming in now for tour operators for 2021 departures, those travel agents are having to do all of that work now, pay some of the fees around that booking, for example, the credit card charges or what have you, but maybe aren't able to collect any of their commission and receive the cash for that commission until maybe the early part of 2021, and really it's cash now that is the real problem. So I fear it's agents that are getting squeezed probably marginally more than operators at this point. Once you start to look beyond customers' appetite and willingness to travel, I still think there are a number of stakeholder hurdles that agents and operators really will have to grapple with over the coming months. I think all of these different stakeholders have a vested interest in the financial health of the sector and will need to be satisfied with their level of risk exposure. But that's actually one of the main problems that they're all facing at the moment, is exactly how do you measure that exposure? Because the normal patterns are completely out of the window. So, for example, typical summer operator might expect to, in a normal year, have an exposure, or the regulators would have an exposure to them that looks something like this. So June and July it would be very high as customers had paid their final balances for departure. As you get to October and those holidays finished, the exposure unwinds and drops steadily down into December, and there's a very low exposure period before it starts to increase and climb up again in January as new bookings come in. And that low exposure period in around December, maybe November and December, is really important, because for those stakeholders, it gives them a window to assess the companies and to take action if they can or they need to without crystallizing a loss on them. And that really is often what gives them the comfort to extend credit or to give insurance or take a risk, in effect, because they know that they've got a degree of control. That exposure is much harder to ascertain now, partly that's because of this whole refund credit piece. The delayed refunds mean that potentially operators, albeit the summer risk exposure is lower, but they may have collected full balances that are now for holidays that are going to depart in 2021, and so the insurers or the regulators are carrying that exposure throughout that whole, potentially as far as as long as a 12-month period. I think the other thing is the booking patterns are kind of out of the window, and so companies that would normally not expect to take many bookings in December may find that there's a bit of a run on holidays around October and November for those late or winter departures. And again, that just means that those stakeholders no longer have that period of control where they can take some action if they need to. And so the consequences of that are potentially quite severe, because you could start to see them either pulling credit lines, refusing to give insurance, asking for additional security, all of those things. Certainly we're seeing that at the moment, seeing credit card companies asking for security, for example. It's really something that we need to keep an eye on, because that could become the inhibitor to the upstart again and to the resurgence. So no doubt there's a bumpy road ahead. I mean, I think just to throw some key dates out there, throughout this summer period, the companies that renewed their March ATOL renewals were given a restriction on those licenses and some conditionality around what they could start to sell. And they were obligated to go back to the CAA and prove that they were sufficiently creditworthy and had strong enough liquidity and finances as the feature became clearer. So those companies will be working throughout the summer. You know, at any point, we might see companies unable to demonstrate that ability to the CAA, and then they won't have a license necessarily big enough to be able to sell the holidays, even though the demand might come in. In August 2020, we'll start to see the winding down of the furlough scheme. Still some support from government, but certainly more cost on the operators and the agents. And so what we might start to see is more redundancies around that time, which again reduces a company's ability to service those bookings if they do come in, particularly given what I mentioned about the agents and the timing of when they're earning their commissions. I think September 2020 and leading up to that point, we've obviously got an ATOL and ABTA renewal there. And that's really where you'll start to see bonding and security issues come to a head. And that conversation will be going on throughout the summer for certain companies, and they'll be trying to get the regulators comfortable. Equally, though, they will have to try and get those bonds renewed. And if insurers are uncomfortable, we already know there's a significant lack of capacity around. Some of those issues will come to a head over that period. Companies with a March 2020 financial year end would have to submit their financial accounts to IATA by September, and April would submit in October, etc. And so it's around then that we'll start to see the financial accounts containing some of the impact of this situation. Certainly, if you're an agent and therefore you'll recognise those losses much earlier in your accounts, that could be enough to cause you to breach the financial conditions of say, IATA, and maybe you'll be needing to provide some sort of additional security by then, again, with that lack of capacity to cope with. We do know, and we have heard, that IATA are starting to look at what, if anything, they'll do to ease those financial tests, but at this point, the tests apply as they always have done, and certainly companies that were in a loss-making position, net loss in their profit and loss account, would automatically have to provide some bonding, as well as some other potential triggers as well that could also trigger that. And then looking further ahead, April 21 will be when we start to see companies who were first out of the blocks in taking bounce back loans and CBILS loans start to have to pay them back. There was a 1 year grace period. And that's when the cash outflows will start. So again, there are potential cash flow implications for that. And if the return to cash flow positivity hasn't happened by then, that will just be an added burden. I think throughout that period, there is always the chance of the odd pothole from whether that be a supplier failure or indeed an agent partner failing without passing commission on. That could cause the sorts of pressures to cash flow. In addition, some of those stakeholders maybe start asking for security. God forbid there's then the ever-present threat of a second wave. And I think I might have depressed everyone enough, so I better not mention the Brexit elephant that will keep running out in front of the road over the next few months, certainly leading up to the back end of this year. So, look, to summarise, we're certainly not at the end of this crisis, nowhere near, and probably we can't even really say we're at the beginning of the end. But it does feel like we might have reached the end of the beginning, and the risk of flogging this road metaphor to death. That is a really important milestone that we always knew we were going to have to pass through, the point when things at least stopped getting worse. And it really feels like we've maybe hit that point. And that's probably about as positive as you can get at the moment. But like I say, we'll then aim for stability, the beginning of the end a bit further down the tracks, and something resembling normality a bit further on. That's all from me. Thanks for listening. I'm sticking around and very happy to answer any questions.
Thank you very much to Martin for that insightful presentation. I appreciate it might not have been fully optimistic, but thank you very much. Martin is now joining us for a live Q&A, and just while he does, we're going to start the first of our polls of the afternoon. We just want to really hear your thoughts. So how optimistic do you feel about the rest of 2020? Not at all? Do you think we'll see little appetite for travel for the rest of the year? Semi, do you think we're over the worst, but we still face a tough year ahead? Or very, now that we're emerging from lockdown, are you confident that bookings will start to return? We will be sharing the results of that poll very soon. So please do share your thoughts. We'd love to hear that. And Martin is just joining us now. Martin, I don't know if you can see the poll on your screen.
And hi, Sophie. You probably should have asked that before I did my presentation.
Well, I know. Before and after. How would you vote? I'm going to guess. Is it number 1A? Would you vote, or what would be your response? Can you see the poll on your screen?
Yeah, I can. Well, look, I've just given you 20 minutes on probably where I stand. I'm kind of somewhere in the middle. I do think there's a chance that for certain sectors that there is a chance of a late summer rush. Certainly the guys in the domestic market that we're talking to are already in that position. Some of them even are holding back stock, expecting a real sort of last minute run, and they think that they can get some sort of decent pricing out of it.
Yeah.
I think at the other end of the scale, there are people who are selling certain types of trips to certain destinations that you definitely don't think are going to see anything until 2021. So yeah, real mixed bag, I think.
Okay, well, we'll share those results shortly, but let's just move to the Q&A while people continue to vote. We've got a question from Polo Sanchez Val, who says, what are your thoughts about the future of travel insurance? Will the choice of destination be impacted by possible new travel insurance policies? And do you see a possible impact on travel due to a potential insurance price increase for the over 65s? That's interesting, because we know that the over, although I think it's the over 70s or the over 75s that are more at risk. But what would your thoughts be on that, Martin?
Yeah, well, look, I do think that there's a lot of interdependencies here. So at the moment, travel insurance is, I think something like half of the policies available before this crisis have been pulled and aren't being offered. And the ones that are still being offered start to have many more caveats in there than they did have in terms of, taking out anything that relates to this situation. So inevitably right now, it must be having an impact. And as things do start to open up, if people aren't able to get that insurance, it's definitely going to stop them booking. I think where we end up, once the FCO advice is ideally removed completely, and if not at least finessed a bit to start to pick out certain destinations, as things become a bit clearer about where you can and can't travel, I would hope that the insurers move in lockstep with that at the same time. Whether that starts to inform who can travel and to what destinations, I guess we'll have to see how those policies look. But there's a wide range of policies available always, and they come at a wide range of costs, and because there's a wide range of cover, and maybe it will force customers to look for policies that are a bit more robust and a bit more all-encompassing.
Yeah. Okay. Just a question on sustainability. It was really interesting that you flagged the points about the fact that we've been working so hard to get rid of single-use plastic, and yet tragically, this pandemic could see us now returning to that just because it's the only option for health and safety. Do you really see that that's what's going to have to happen?
Well, just flicking through some of the things that the airlines are saying they're going to have to do, and the hotels and the resorts are going to have to do, I think it's inevitable. It is tragic. You're right. All that good work potentially. What's interesting, and I suppose time will tell, is how many of these new practices last for years and years, and how many of them are short-term measures to get customers confident again to start kind of using the product, and then maybe will fall away as quickly as next year. It is hard to know. It's also hard to know. Certainly, I'm got no kind of knowledge of the science behind what's more likely to transmit the virus than other areas. But everybody is playing it very cautiously at the moment. All of the big hotel groups, this cleanliness and additional measures is a big part of their marketing right now, because they're trying to get people from a state of panic and negativity to proactively go and book. So maybe as things start to move forward, it won't necessarily have to stay like that.
Might change a bit, yeah. We've got a question asking about, interestingly, what impact has Thomas Cook's failure, leaving only one tour operator monopoly, I'd say two, because Jet2 is obviously a big player with two, COVID-19 and the cash versus credit, what impact has this had on the marketplace propensity to embrace innovation, to compete with a repackaged customer value proposition? That's sort of a bit of a jargon. Yeah. I think he's saying, look, we just had a kind of a string of impact, of issues hitting the industry particularly hard, and what impact has that had on innovation coming into the sector?
Well, so look, I think you're right that obviously there is still two big traditional vertically integrated tour operators. Jet2 actually had already overtaken Thomas Cook in terms of passenger numbers, hadn't it, just before it went. I think there is a lot of innovation comes in. I mean, if you look at the top 10 ATOL holders at the moment, still the top two are these vertically integrated groups that own their own airlines, but snapping at their heels is a whole list of OTAs that didn't exist 5-8 years ago, the likes of the Holidays and On the Beach and those guys. I think, if you go back to, let's not forget, it was only 6 months ago that they were all planning for an absolutely bumper 2020. And so reading On the Beach's latest statement that they put out in line with it, they took on some additional funding and raised some additional equity. They were talking about something of the order of 25-30% ahead in bookings in that sort of January, February. And a lot of that was because of innovations around the way, their low deposit metrics worked, and sort of multiple payments and those sorts of things. So I guess there's innovation there. There's always opportunities in these sorts of cases. I mean, the big businesses that have, tragically made big cuts to jobs and large numbers of redundancies that we're hearing about, they will always be in areas of high growth that aren't necessarily generating huge profits right now, but are interesting areas. And in a crisis, they're the first things to get cut. But that's what creates the gaps for the entrepreneurs, and if you go back to the financial crisis, that's where the likes of, Uber and Airbnb and all of these kind of massive tech companies that are ubiquitous now, that's where they all came from, was spotting those little gaps that have been created by the incumbents who are cutting and sort of leaving the gaps.
So actually we might see a raft of innovation coming down the line.
Yeah, I hope so. I really do. I think, if you read any of the messages, the Airbnb, for example, when they made their layoffs, they put quite a lot of detail in there about the areas that they were cutting. And it was all of those, what we called non-core areas that were at that point a drain on capital for them, because they were not making profits. They weren't generating a cash inflow and therefore have to be cut. But somebody else could run with those ideas and build some very successful businesses. So fingers crossed.
Okay. We've got a question from Andrew Stewart. He says, Martin, where does the exposure sit in terms of a failure with merchant acquirers? In the past, the CAA picked up debit cards and credit card companies. Is this still the case given the mix of spend has moved heavily towards credit card companies post-abolition of surcharging? Or did the Thomas Cook failure change this?
Yeah, big issue. And so right now, nothing's changed. So there's a long-winded answer, but I'll try and keep it short. There's basically an agreement in place between the Air Travel Trust and the major card companies, and that determines who picks up the cost of a failure. But usually, if a credit card company has signed up to that agreement, they would only be picking up the failure cost of bookings paid on credit card, or debit card payments will be picked up by the CAA. But Andrew's absolutely right that when the payment parity rules came in a few years ago, that resulted in a big swing to people booking on credit card. Why wouldn't you? Because you got all of these extra benefits without any of the cost. So that should have dramatically reduced the exposure of the Air Travel Trust. But at this point, that often isn't sort of seen in the in the resulting set of licensing conditions.
Right. Okay. We've got a question here about the UK. Obviously, you touched on it in your presentation, the fact that I think you said that one operator you were talking to was only 30% down compared with 90% for more outbound operators. But this anonymous person says, do you think we'll see more tour operators begin to offer UK-focused breaks over the next coming months? We've obviously had Keone, of course, launching their first ever UK and Ireland product. Do we think we're going to see much more of that from traditional outbound players?
Yeah, well, so you're quite right. Keone have gone down that road, and I mean, I think if everybody does it, it'll become a very crowded space, won't it? And maybe starts to cannibalize any margins that you can make in it, and then stops people needing to do it. I guess the specialists will always argue that it's not something you can recreate quickly, but there are, I guess, ways you can. If you're a large operator with a large audience, you don't necessarily have to build a whole load of product and cost. You can partner with other DMCs and suppliers to just be able to have an offering on there. I think it's as much about keeping contact with your customers for potentially this period where they're more likely to want to stay local. But I appreciate that if you're running tailor-made, fairly kind of complicated package holidays in far-flung destinations of the world, to suddenly build a very complicated UK package, it isn't something you can do overnight without a lot of resource from that.
No, fair enough. Declan Hughes has got an interesting point here. He says, do you think destinations may compete with each other in new ways into the near future, such as what Cyprus is offering their visitors, for example, COVID-19 assurance? I don't know if you've seen that. So Cyprus is offering to pay the medical bills, I think, of people who may perhaps contract coronavirus while they're there. So Declan is asking, are other destinations going to compete with this? Are we going to see destinations fighting for tourists to bring them back? Because tourism is such a vital part of many destinations.
It's really interesting, isn't it? I mean, you look at some countries where it really is, it's 15% and more of their GDP. So I read some stuff that the Portuguese initiatives around safe stay and a kind of central accreditation system for which hotels should have it. I mean, that whole shift in marketing message, whether it's the destinations or it's the tour operators who have spent millions and spent a lot of time crafting the message around what are the key aspects of their product that they're marketing, and suddenly are having to shift to talk about the cleanliness aspect or the ability to socially distance. So you could certainly see it, and destinations, and I think that's really what's behind. Seems to be Portugal who are the closest or the most sort of vocal about getting this air bridge corridor agreement with the UK, and I guess it's because they're so dependent on tourism, and particularly on British tourists. So yeah, you could certainly see it become a point of marketing, couldn't you?
Yeah, and this point of air bridges we're going to be discussing later on, because that, of course, is going to have a massive impact, touch wood, if they are brought in. Someone just said as well, I think that Japan might be paying towards people to visit in 2021 as well. I'm not sure where they've got that from, but it's certainly a point about destinations just maybe having to compete.
I mean, just look, it's not necessarily a new thing that destinations will fund marketing campaigns, right? I mean, a lot of tour operators do that and actually have that as an income stream very, very successfully. And so that is all from the same place. It's the marketing, it's the destinations spending money to bring tourists who they know will spend more when they arrive. And so, yeah, I'm sure that will continue, maybe just in a different way, perhaps.
We've got somebody asking, if people travel despite the FCO advice, would their insurance be invalid altogether, or would insurance companies still cover them, for example, for non-COVID-19 related issues that they may encounter in their holiday destination, if they fell and broke a leg in Greece, for example? I understand it. If the FCO advice is saying do not travel, you're not protected by your insurance company unless you've got a very special clause in your insurance company for work purposes or something. Is that right?
That's my understanding as well, Sophie. Yeah, it's certainly a very high risk. I guess there's maybe a sort of nuance to that, but it's not really my area of expertise. But I think you'd be taking a big risk if you did that.
Yeah. So we're going to look at the poll results now. I'm just going to share the results. Okay, mixed bag, but nobody, well, 6%, only 6% are very optimistic, which kind of, I think, sums up your presentation, Martin. The majority, of course, are in the middle ground, so saying that they think we're over the worst, but we still face a tough year ahead, which pretty much sums up your point as well, Martin, doesn't it? Is obviously still a huge degree of frustration. 30% said, I think we will see little appetite for travel for the rest of the year. You would agree with those results then, presumably from everything you've been saying?
I think there are pockets of interest on there. There certainly seems to be some companies we speak to who, I do think it depends on your core customer base. You're generally carrying slightly older, slightly more vulnerable passengers. If your trips are, you know, to slightly more kind of exotic destinations, then maybe that's harder to recover versus people who are generally selling sort of slightly more adventure type breaks. Anyway, I think it's certainly not a one kind of homogenous improvement. It's every single subsector that improves at different times and in different ways. Certainly, we've talked about before, isn't it, that it's a very uneven distribution of this recovery.
And just tying into the title of today's seminar, if the FCO advice is lifted, if the quarantine measures are lifted from the 28th of June, can summer be saved, or is it just too late?
You know, for me, I think that there's you're not going to get a quick answer, by the way, apologies. But I think, you know, there's undoubtedly that pent-up demand is being released, and people are starting to book and pay for domestic stays. I think there's so many potential changes to the holiday experience. You know, a holiday goes way beyond just the flight and the hotel. Like, can you get on a plane and can you find a bed? 100%. I think by middle of July, end of July, that will be theoretically possible. Okay. Do you want to? You know, you can imagine some of the stuff that we talked about, the 500-meter queues for getting through passport control, the slightly more kind of clinical, utilitarian experience of being in the hotel, queuing for the beach. I noticed the sound had sort of cut out on that whole bit around timetables. You know, you might need a timetable for when you have breakfast, when you're allotted slot at the beach, when you can use the pool. Everyone's in face masks. The restaurants are, you know, nothing's on the table. It could be a horrific experience, and if that gets widely reported, then you know, and that's whipped up by the media, then people won't book, will they? But I certainly think it will be theoretically possible. And then, you know, I think the experts who are listening to this have then got the job of going out and marketing and selling that, haven't they? That's what they do best.
Yeah, and certainly a lot of people are sick of staring at their four walls. That, you know,
yes.
Wait to get away, and like you said, you're desperate for your holiday.
Yes, I feel like I've sat and stared at this Zoom screen for the last sort of 2 months now.
And twice with us. Listen, thank you so much, Martin. I really appreciate your presentation and for your time today. Thank you very much.